Reserve Bank Governor Lesetja Kganyago says the war will likely impair production of a wide range of energy, food and other commodities and further disrupt global trade. Against this backdrop, it has revised global growth down to 3.7% from 4.4%. However, it sees the domestic economy growing by 2%, revised upwards from 1.7% at the last MPC meeting in January. It says this is due to a combination of factors, including stronger growth in 2021 and higher commodity export prices. On Wednesday, SABC kept rates flat at 5.7%, citing food and non-alcoholic beverages, housing and utilities as some of the main contributors. The bank has revised local inflation upwards for 2022 to 6.1%, but says this revision will moderate in 2023 and 2024.
Food prices will stay high. Fuel price inflation should ease in 2023, helping headline inflation to fall to 4.6% despite rising core inflation.
Inflation is becoming a global problem and widely expected to breach the 6% level. Economist Isaac Matego says this will dampen consumer confidence further.
And we could see consumers, restraining their spending after we saw a very good start, for instance, to retail sales in January.
This rate increase is the third since November 2021, raising concerns about if the Reserve Bank is following on the footsteps of the US Fed. Kganyago says the bank is cognizant of the local conditions.
We can't try and match basis point for basis point what the Fed has done. What we need to do is to assess, which is what we do, assess the global economic conditions and the future trajectory of the global economy. Identify the channels through which it would impact on the South African economy, both on the growth front and on the inflation front. And based on that assessment, take a view of where the South African economy is going and then recalibrate policy as appropriate to respond to that.
Another economist cautions that the current repo rate is below neutral as the Reserve Bank did cut rates aggressively in response to COVID-19.
So we're starting from a very, very low level. And so, even going up through to next year, you don't really, it is clearly tightening, but it's not extreme tightening. So I think that they're using that quarterly projection model quite effectively. And
the bank warns that economic and financial conditions will remain more volatile for the foreseeable future, and the MPC will look through temporary price shocks and focus on potential second-round effects. Diabosito, SABC News, Johannesburg.